We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm Gabe Johansson. I'm here in the studio today with Mike Nuss, Trevor Howard, Dane McKinney, and we have a special guest with us today. I'm going to get this wrong. Maybe I won't get it. Let me try to do it. You are Justin Freishtat.
Oh, you nailed it.
Woo! We got it.
Whoa.
All right. So Justin flew in today. Where'd you fly in today from?
Las Vegas.
Las Vegas. You live in Las Vegas?
I do.
Oh, is that a crazy place to live?
It can be. Not for me. I live up in the mountains on the back of Mount Charleston, so I'm kind of in the wilderness, but 30 minutes from all the action if I want it.
All right. Well, thanks for coming in to be on Deal Junkies today. We're excited to dig into your brain a little bit and learn more about you. So, Justin, I've read your resume. It's so impressive I can't even repeat it, but you've grown businesses, sold businesses, had exits. You're a hedge fund manager. You're heavily involved in, sounds like really, really big deals. You're doing a deal right now that has an economic value of over $4 billion. So I feel very outclassed right now. Like we like to go out and buy, $1 million apartment buildings. So to do what you're doing is super impressive. So tell us a little bit, let's go back and maybe you can tell us your story and we want to know who you are. Tell us how this started. Was this something you wanted to do as a kid when you grew up? Was your family involved in this business? Like, how did you get exposed to the world that you live in today? And just give us a little backstory on it.
Yeah, it's been a ride, I'll tell you that, especially growing up watching my dad, because this is a guy that built a $30 million business, lost everything, built another one. So I got to kind of live through that, seeing what's possible, which I think is a huge gift, but also what life can look like that humbles you on the downside. So I don't know, like, when you go through that as a kid, you've kind of lived those cycles before you're an adult and you get to go through it yourself, which I think was super valuable. Didn't feel like that when I was a kid. I was just a big victim. I was like, look what my parents have done to me.
You were still at home when Dad lost it all?
Oh, yeah.
What age?
I was like 13.
Oh, okay. So you grew up kind of silver spoon and then it all disappeared?
Oh, yeah.
That's got to hurt.
Yeah, it hurt real bad.
What did that mean for you guys? Like, what did actually losing it all mean? Like, how did you know? Because I feel like my parents tried to be really, private about money and where we were at financially. Whether it was good or bad, I think it was usually fine. But
yeah, I think in our case, it was a total destruction. Like when he lost the business, like within a year, my parents are divorced. I'm the oldest of 4 kids. You go from mansion with a skate park in the basement and a hockey rink, and I had way more than any kid should ever have, to literally your dad's living in his office, and it's just terrible reversal, right? So you're pulled out of your private school, now you're in public school. It's like all these massive changes that happen, and you don't think about what your parents are going through that time. I'm sitting there just
were pissed,
violently pissed.
Where's my skate park?
Right? Yeah,
violently.
And you say you were 13 years old when this happened. Wow, that's a hard age. So. Mm-hmm. So you weren't thinking about mom and dad and what they were going through. Like, tell me a little bit about his business. What was he doing?
Yeah, it was Next Day Blinds.
Oh, yeah. Okay. He was like a franchisor or
No, so he started a company called Vertical Visions in the 90s, and then my uncle had a company called Steven Shade. So my dad was the sales, in-home sales, direct sales model with the blinds, and then my uncle was the manufacturing side. So they had both those companies working together, and they kind of merged them together into Next Day Blinds, and the whole premise of it was, tomorrow you get your blinds measured, delivered tomorrow, and they could do it because they did the manufacturing in Maryland, right in the territory. So, they blew that thing up, and then my dad sold his half to my uncle, and that's when he exited, and literally within a year, everything just blew up.
So his exit must have been tied to the future performance of the company, which turned to zero.
No, my uncle kept it. This is a crazy story. He kept it all the way until 2019. And I can't remember what the big national competitor was that came in and basically said, you're either going to sell the company to us or we're going to put you out of business. So he ends up exiting against his will at the end of 2019 with I don't know how many retail locations across the Eastern Seaboard. Probably a 9-figure exit. I don't know the exact number, but a massive exit. And then the pandemic hits, and within 6 months, that company closed.
Wow. Oh my God.
So it was the greatest thing that ever happened to him.
Uncle did okay.
Oh yeah. He's set for life for sure.
So your dad lost it all when he had to sell his half to uncle? Like something happened between the two of them, or?
No, I think he just wanted to get out, tired, wanted to go into the investment world, which he did.
Okay.
And then built another business into the dot-com bubble that crashed.
Okay.
And, so lived through that one too.
So you're no stranger to pain, seeing it from an early age before you could even jump in.
Right. And it kind of shaped my investment thesis, how I approached everything, is I got so obsessed about finance at a young age. Before I had any money, I wanted to be prepared for what you do when you do get it. Because I think what makes you a great entrepreneur is the opposite of what makes you a great investor.
Okay. Explain that. Go into that a little bit. Tell us why you think that.
Yeah, you got to double down, take risks to build, right? And then once you've actually built and you go into a protection mode, most of those personalities will go into the investment world taking the same types of shots. And,
so you're saying entrepreneur is a growth mindset, whereas an investor is more of a protectionary mindset.
Yeah.
Okay.
Yeah. Great investors are patient. They're methodical, not emotional.
They've got ice water running through their veins.
Yeah.
Yeah.
Hey guys, this is Trevor. If you're interested in working with us, we are hiring at Stack Asset Group, which is our investment company. We're hiring for 3 roles right now. One of them is an executive assistant. The second is an acquisitions associate. And the third is head of acquisitions. So if you think you would like being part of our team, we put a link in the bio so you could see a little bit more about each of those roles and apply. Check it out.
Interesting. All right. So keep walking down the road. So you're young, you're a teenager, you start thinking about money at a very early age. Like, what were you thinking at that time? That you wanted to go to school, you wanted to learn how to do something, or you wanted to invest differently? Obviously, you want to do something different than what Dad did.
Yeah. I mean, at that point, I just wanted to play hockey. That's all I wanted to do. So I was terrible in school. I think I got out of high school with like a 1.9 GPA. And the only thing that got me into college was hockey. I remember the athletic director walking me into the dean's office at UMBC, handing him my application, said, "Look, we need him on the team." I mean, it's an honors university. I'm getting in with a 1.9, right? So I stayed in college for 5 years, just playing out my eligibility, changing majors, trying to figure out. I was so lost. I was like, I don't get the school thing. And my parents were like, "You're going to go to college," right? It was like that type of thing. And then sales saved my life. Like one summer, my dad had another startup. It was an organic food business. And I'm working in the warehouse, packing orders, doing deliveries, making $7 an hour. And I'm seeing these sales guys making like $100,000 a year. And I was like, I got to figure out what they're doing. So I just started shadowing that top sales guy, just going out with them, and started doing door-to-door sales. And I dropped out of college, never went back. By the end of that first summer, I was on a run rate to make more money than all my friends graduating with degrees.
Yeah.
So I was like, okay, now I get it.
Working in Dad's business.
Yeah.
Okay. So college dropout after 5 years, but you got to play hockey for 5 years.
Yeah. Yeah, I played out the eligibility.
Are those all your teeth, or you have some fake ones in there?
All reconstructed. Dude, I've had like 7 teeth reconstructions.
Hockey's not a great sport for your teeth, is it?
No.
Do you still play hockey?
I did up until about 2 years ago. When I moved out to Vegas, I stopped playing.
Yeah. Do they have rinks out there?
They do.
They play competitively? That's interesting.
From what I hear. Right. I don't know.
So hockey was in your blood. Mm-hmm. It's a gnarly sport, man.
Ton of fun, but definitely painful at times.
All right, so you're working for Dad, you start making some money, you drop out of school, and this was your exposure to sales. So you start to learn, talking about getting your teeth kicked in, door-to-door sales, or calling on accounts and trying to open accounts. Like it's a tough way to go.
I highly recommend everyone do it.
It's a great education.
Oh, yeah. And it was the first thing I ever did professionally. So I didn't even have a barometer. I'm like, I guess just everything's really hard.
That's what work is.
Yeah. Success out of ignorance and just not quitting, right? I had no skills. I remember just being terrible, like shaking, like scared to go to the front door and knock, But yeah, 10 years later, I personally sold a little over 20 million door to door, recruited teams that did about 35, and then we exited. So yeah.
So Dad got a good exit finally.
Yeah. Yeah.
And you got to partake.
Yes.
Do you become an owner in that company with him, or did he just pay you out as you're my son and you're part of it? Yeah.
Yeah.
Get a little piece of it.
Yeah.
All right.
The idea was we were going to keep the family business forever, right? It was like that was going to turn over to me. So I treated it like my business from day one.
And this was what you said, it was food delivery?
Yeah. Organic food delivery and appliances. So we would partner with really high quality farms and bring restaurant quality to the home in vacuum sealed 2-year shelf life in a freezer. So we'd sell it in 6-month increments. So they had to buy our freezer to put it in. And then it's, hey, do you need a grill? Do you need cutlery, cookware, water systems, air purifiers, mattresses? We sold all kinds of other stuff.
Wow.
That's smart with the supplemental stuff.
Yeah. Because it turned really into a health company, right? It's like, okay, now you're on the food. Here's all these other things that
go with it.
Yeah.
That's smart.
Yeah.
So so how old were you when that exit happened?
This was recent, 2022. So
you've been working in that business. How old are you?
38.
Okay. So you worked for Dad all the way up until just a few years ago.
Yep.
Then what?
Yeah. So sudden exit, right? Pandemic hits, the company blows up. Private equity wants to buy it. And it's like, all right, we're selling it. And it was kind of an identity panic, right? It's like, I have no idea. You have all these thoughts, right? I don't know if I can do this again. I don't know if this will translate to other industries. I don't even know if maybe I'm just good at one thing. You have all this imposter syndrome at every break point. I think that's something that everybody has. But I knew I wanted to be in the investment world. The whole time we're building that business, I read sales books, but I was reading about real estate, finance, like how are people making billions of dollars? I was always just dreaming so much bigger than what I could understand. And I knew that this direct sales company, $5,000 ticket, like door to door, was just such a grind. Like I'll never be able to make more than like $300,000 a year knocking doors. Like that's not the end game. So I was just trying to figure that out, but also be like, all right, I'm going to someday have a ton of money. I want to know what to do with it, how to multiply it, vet deals, all these different things. And I had this limiting belief. I was like, well, I didn't get a degree. I didn't go get an MBA. I didn't intern at Goldman Sachs. I'm never going to get into this investment world because I'm not a Wall Street guy. Like I just thought you had to be. Then I just started networking out of kind of panicking of trying to figure out my next thing. Met a fund manager that was managing over $1 billion with no degrees. And I was like, oh, I guess that means I can do it too.
Yeah.
So you saw something that changed your mind there?
Yeah. So then it was like, okay.
Or your belief process.
Belief process is everything, right? So then it was like, all right, I'm brand new. I got to go find some partners. I got to go find people with track records. Like no one's going to just give me money. Or maybe they would. I guess my mindset was just I'd rather go find people that I can bring my skill set and plug it into. And that's where I met my partners in the first 2 funds we launched. And it was a fund-to-fund relationship with a $5 billion fund because his neighbor was a managing partner there. And he gave us a shot, and we got to raise money right out the gate for late-stage private equity. So we're talking names like SpaceX, Flexport, some of the best, biggest pre-IPO unicorns we got to go raise money for. And that's how we got launched.
So we're gonna have a lot of questions in this space because we're real estate guys. We don't talk a lot in this Wall Street world. So tell us what late stage private equity is.
Yeah, so this is once the big boys get in. We're talking the Fidelities, SoftBanks, Andreessen Horowitz. Private equity firms that are deploying billion dollar tranches. That's what I consider late stage. The company's already got $1 billion valuation private, and something that a lot of people don't know is once Fidelity gets in, the only way they can liquidate is through an IPO. So they don't get in unless that company's going to go public. So
they're the last investor in before it goes public.
Yeah, one of the last ones in the late stage rounds.
So walk us through the stages of private equity then. When it from like startup, and then it gets a little bigger. Maybe you hit your $5 million a year in revenue, and then it kind of goes on and on.
They're all different. It's like seed round, A round, and then some of them do what we did with Safe Space, where we have a company that's private with no debt. We can go do something called a reverse triangular merger.
Oh, jeez.
Okay. So this is a penny stock that has failed. It's a worthless company. We go merge into them, replace the board, and then create a new entity out of that. And now we're publicly traded from day one.
Without issuing an IPO. So it's like a back way in.
Yeah. So that's called a reverse triangular merger. And that's what we did with Safe Space. And then start building the company, and people can invest publicly and we can raise privately.
So this is your way into Wall Street without having to do an IPO.
Right.
You just take over a small, worthless company that's already publicly traded.
Yeah, you can do it that way, or do it the traditional way.
I'm glad you flew in. We're learning some new ideas here.
Wait, so when you do that, you're changing the whole product of the company too, yeah?
Right. This was a marijuana staffing company. Like
the penny stock was a marijuana staffing company?
Yeah. It's essentially, I don't like the term shell, but it's kind of what it is, right? And then you say, okay, we have a company here. We want to merge into you, and then create a new company and change the name, change the stock ticker. You go through a FINRA process, and now you're public.
Well, you said that when you decided you're going to go into this world and you're sort of scrambling, you did a lot of networking. How did you specifically network and find people that were in this world that helped you get to where you're at today?
Yeah, it is crazy when I think about it, because it's been, 3 years since I went into this world and networked my way into all this stuff. So, man, a lot of blind faith. It was just like, starts with, okay, what mastermind? I think the first couple ones I went to was like $5,000, to go to a weekend mastermind. It was a real estate mastermind. And, then it's, okay, who are the speakers? What else do they have? What events? And then you just start going. And sometimes it's the people you meet in the room, like always buy the highest level ticket. You meet the highest quality people, and then it's the dinners, and then it's what are you working on? And I you
just bought yourself into the right rooms. You just paid for a ticket to get in around the right people.
It's really hard to do when you feel like you don't belong in the room you're going into, right? Everybody's miles ahead of you. But that's
how I feel hanging out with you right now. I didn't even have to pay for this ticket.
Go back real quick to before you sold. It sounded like, and this is the tip of the iceberg, so I don't want to project an opinion on it, but it sounded like you were, rather than having leverage in your life, you were the cog, the lever for the company as the sales guy. And then you were reading a lot, understanding finance. Was that kind of your first leverage, was your brain and what you were learning? And then that helped you when you started getting into these rooms? Like, what's that growth pattern? I've seen a lot of your shorts, love your mindset. And so I'm the touchy-feely guy. They love the deals and the finance, but I'd love to see how you transitioned yourself over that period of time.
Yeah, I mean, just continuous obsessive learning on everything. And it's not just one topic, right? It's like trying to figure out how my brain works. Like, why do I feel this way when certain things happen? Like, why am I scared to go in a room just because somebody's worth $1 billion or whatever, right? And I think working on that personal development stuff in tandem with the industry education knowledge is what makes you a well-rounded individual in all those things. And then there's just no substitute for experience. So you learn them. Like, I learned the most from doing the first couple deals than all the real estate books I read, right? So I think the willingness to do terrifying things and just understand that fear and excitement's the exact same thing in your brain. It's just how you label it.
Had you done real estate before you went to that mastermind, and why did you choose that mastermind?
I was just trying to go. So I was just started raising capital, right, for the first time, and I was like, all right, I want to go into rooms where people are wealthy. I don't care what the topic is in that room. I didn't want to go. Like, I think the worst thing you can do is, if you're raising money for real estate, go to a real estate event. Like, everyone's raising money for the same thing, right? So I would look at, okay, infinite banking life insurance. I'll be the only guy there raising money for late stage private equity. I'm the unique offer in the room. So that's kind of the way I would network, is go to, like, I didn't care if it was crypto, stock trading, real estate.
Just go to where the money is and offer something unique.
Everything's a people game. So it's like, the more hands you shake, the more money you make. It's very simple on the surface, but it's just a relentless pursuit of that with no expectations, just meeting as many people and just having genuine conversations. And if something happens, something happens.
So what's going on in your head? You're out trying to raise money and you don't really know what you're doing yet. I mean, you're learning how to do what you're doing. Did you feel confident in your offering, and what were you offering?
Yeah. So the first one was Flexport. And, like, as a sales guy, like, I'm a sales guy through and through, right? Done 100 million total in sales. So, and I'm not really like an outgoing, extroverted personality. It's like, I need to know what my competitive advantage is and be very clear about that distinction. So for me, it was, hey, Andreessen Horowitz and SoftBank put $1 billion into Flexport at $14 a share. What we do at Innovation X, which is our fund-to-fund partner, kind of like in real estate, when you wholesale a deal, we do that with private shares. I got the shares at $7, half off of what the biggest private equity just bought it at. Do you want it? And that was it.
Yeah.
That's a great analogy.
Wow.
So how much did you have to raise when you were doing that?
So when Innovation X and these big private equities, they want to raise like $100 million in a month, right? They'll go to their smaller hedge fund partners, they'll raise a ton themselves and then say, okay, what's your ability to raise, right? So we got a $3 million slice on that one.
Okay.
And, fully funded that one.
Yeah.
How do you negotiate that discount on the stock so that way you have something wholesale to sell?
So in this situation, that's all done by the bigger firm.
Okay.
Right? They send the mandate down. All I have to do is be the sales guy for it. I did none of that.
Okay. So you had a very good value proposition from the get-go, belief in it, and sales chops.
Yeah. I think that's what I stick to, is attach myself to no-brainer offers, kind of like the $1 billion deal we were going to talk about. I did none of the underwriting, the deal structuring, any of that stuff. It's just, okay, hey, here's how it's packaged up. Go find investors. You know.
Awesome. Yeah, I've got something here that's half off. Who wants it?
Yeah.
That's amazing. So you sold every share that they were able to funnel through.
We fully funded that one.
So when you raised that $3 million, was it just you raising 3, or was it a group of you raising 3?
So 3 guys launched this fund. I have two partners in it, and I raised 2 of the 3.
Okay. Was that because that was your first raise you did then? Mm-hmm. Did that seem like a lot at the time, raising $2 million?
Oh yeah, I had no expectations. I was like, I don't even know if I can do this, you know. And I'll never forget the first time I got on a Zoom meeting with somebody who saw me on a podcast. That's why I'm so passionate about doing these shows. You know, you might do 10 of them, nothing happens, and then guys saw me on a podcast for an infinite banking life insurance show, and comes through my Instagram, gets on my Zoom calendar, 15-minute Zoom meeting, wires me $1.2 million. And I was like, I used to have knock doors Saturday, Sunday, 90 days straight to get a million in sales if I was lucky, and I just did it in 15 minutes, right? And that's what kind of shattered my whole belief system of like this working smarter thing, not harder.
Yeah. No, one of the reasons after I talked to you why I wanted to have you on is because we're doing much smaller scale, but similar to you. So like the first raise Dane did was $4 million and like raised out. Gabe ended up funding. We fell short, and Gabe funded $1 million of it personally.
Hey, you didn't fail.
We wanted to co-invest. Okay.
Well, no. Why I think it's cool is because you're talking about doing like a $2 million raise at the start, but you're doing way bigger now. So it's cool hearing Dane at 25. Like his first raise he did was $3 million on his own type of thing.
Yeah.
And so I want to hear like the progression of how you grew it, because we're trying to do bigger deals as we go. So I really wanted to learn from you, like how you grew, how your mindset changed, how you continued to raise as you've done bigger things.
Yeah. So then I started to put myself in rooms like the Family Office Club, and join. You got to pay to play out here, right? So, like how do I get closer to institutional capital, family offices? Like that's the next level of this whole game, which I'm still figuring out right now, but.
Because were you doing like friends and family at first when you raised that first $3 million?
Yeah, it was all friends and family or people I was meeting networking. Or the other thing is the personal brand is huge, right? So it's like if someone meets you for the first time in a restaurant or at a bar or networking, it's a very different feel than if they see you speak on a stage and then come into the conversation. So if you can meet people from a place of authority, game changer, right? So that's why I started doing so much media. And then saying, okay, when's your next event? Can I speak at it? Blah, blah, blah. And that's where a lot of the capital gets raised is from speaking.
Okay. So you're just going to events, doing your pitch, or sharing your story and doing your pitch? Because we found we raise capital from ancillary, like we go speak at events, and then we're not even trying to raise capital, and people are like, can I give you money? Yeah. And we're like, oh, that's crazy.
Yeah, you got to let people get to know you in a longer form content.
Yeah.
Yeah, that's exactly right. It's like we always talk about being on a podcast. We get to talk here for an hour, and our listeners get to feel like they're part of our conversation and get to know you for an hour. It's very valuable. You can go talk to thousands of people right now just by recording, for an hour. So.
Yeah, and people forget too when you're building your social media. It's like if you got 100 people in your stories, like imagine what that looks like in a room. I get to talk to 100 people, like every time, and then it grows 300, and then you got 1,000 people. It's like. For whatever reason, people they don't see it the same when it's online, but it is.
How are you picking up speaking gigs? Just get invited?
Either networking.
People see you online or
DM outreach.
Yeah.
A lot of just DMing people.
So yours was different because we get a lot of DMs, and your VA had us DM'd, and I was like, oh, that's the only one I find actually interested. Because like you were doing business, like real business. Most people aren't really doing anything. I find, and they want to be on podcasts, but yours was interesting. I was like, okay, let me see if this is real. I hopped on a call with you. I asked you some questions. I was like, oh yeah, you know what you're talking about.
Yep.
So like, what's the difference in that versus what everyone else is doing? Because we get those all of the time.
Yeah.
But you're the first one.
Well, see, and this is a sore topic, because we have a social media marketing business too. So we literally build brands, and like I don't like building a brand for somebody who's trying to create something that's inauthentic to what they're doing in the real world, right? Because usually the dynamic of most of our clients is they're actually killing it in the real world, and their online presence does them a disservice. So, and then a lot of people have this mental block of like, well, if I put money into my brand, it's inauthentic. Like I don't know where this disdain for spending money on your social media comes from, but it's like people will shoot themselves in the foot and fail for 5 years, and all they do is just post content, spam the platform. Like it's not even designed for that. It's to talk to people. So like I think you should build the brand that matches who you are authentically in the real world, and then just go start talking to people instead of obsessing over content. It's like standing on the side of the road with a billboard. This is what I do. This is what I do. And the cars are just flying by.
Yeah, nobody's paying attention.
Can you contrast that? Building a brand versus just content, providing content. Like how do you define that?
Yeah. So building a brand to me is like we're doing a collaboration with Floyd Mayweather coming up here, right? If I can leverage a celebrity's influence to blow up my brand, I'm going to do that, right? Mm-hmm. Right? That's building brand. It's like bringing in eyeballs, but also authenticity and credibility to the page, right? So if you're out here doing $1 million deals, $1 billion deals, whatever, but your page doesn't look like that, like you're never even going to get the chance to connect with these people. So the authentic thing to do is leverage these tools to build the brand, right? So then you can actually go help these people that you want to help.
So what would be an example of like content that was inauthentic, I guess, in your mind?
Well, it's, people that are faking it, right? Like they're renting jet studios and renting a Lambo for the day.
Like last night when Dane picked you up in a Nissan GTR.
Yeah, Justin thought I was so cool when I pulled up in the GTR.
Yeah, he told me, he said, it's still just a Nissan.
Yeah.
Sorry.
And it wasn't Dane's either. Did he tell you that? Did he tell you?
He did tell me it was yours.
He was authentic about it.
You know
Yeah,
what I figured out is because we always talk, because I drive a Corolla, so Justin had no idea where I was.
He would have been impressed by that.
I went to pick him up in the Corolla, and he was like looking around the parking lot. I was like right in front. He had no idea where I was.
Where's the GTR?
He's like, wait a second. But you know what I figured out last night about like why I don't like sports cars, or like why I had never like don't have a desire to have kind of a fancy car. I figured it out last night. It was because I had never driven one.
And now you want one.
It turns out those are way more fun than Corollas. Holy smokes.
And all the girls were waving at you and telling you to roll your window down.
The real reason Dane took the GTR wasn't to pick up Justin. It's because he had a date before he was picking up Justin.
I told her before she got in the car, I said, this is not mine. I'm picking up a guy from the airport, and I don't want him to think that I'm a total loser. He's flying in.
Are you trying to say Corolla drivers are losers?
No,
just his
but
Corolla,
my
'cause it's so
Corolla
freaking dirty, dude.
specifically is not the cleanest thing in the world. On the passenger seat, there's like two really not great stains, I would say.
Most stains are not great.
You can't get them out though. I looked all over the internet, and apparently that's just like that year they used a different type of material.
Dang, that's
I'm
just
dead serious.
inauthentic. You just have to be genuine and say, look, there's some stains on my seat.
Dude.
You know, you're not.
No, it's just nasty.
Just don't
You
tell
wouldn't
them how
want
they
to get in
got
the
there.
car.
It was from a Chipotle bowl. I was just eating Chipotle. Who's to know?
That is a story
How-
that you can then connect with her and get those neurochemicals
Well, it's mostly because Dane just
flowing.
lived out of the state forever and didn't need a car.
That's true
And
too.
then-
That's true too. That thing, it gets me where I need to go. But anyways, I'm buying a sports car. Found that
There's
out
Dane's
yesterday.
brand. He's going to be authentic
I'm gonna
now.
be real
So
now.
I guess selfishly, so we're doing all this stuff to give you a little background so you know what we do. Like we have our company, we've been doing it. We are all buying deals separately. We merge this together. We have in-house property management, construction. We have about 100 million assets under management. Gabe owns like 250 personally between partnerships and whatnot. Now we're doing all these new construction projects. We're buying value add. We never raised money before that. We were just doing all the deals ourselves with one-off partners. So we've been doing a lot of social media stuff like this. We don't really know what we're doing, but we want to grow it because we see the benefits from people like you and what you're talking about. What kind of stuff do you think we should be doing? And I guess maybe how could your company help us too?
Well, number one is position yourself with that information publicly, right? It's like you need grand claims in your bios. When people hit your page, it's like 3 seconds, right? Like you got 100 million under management, like that better be in your bio.
That is not in my bio.
It should, right?
Yeah.
Like, because there's, a lot of people can talk, but it's like if that you can verify that and you can make a grand claim, like you got instant respect.
Yeah.
Like that's respectable.
Do you link it to the website too? Because that's where then they'll just see all the projects and be like, oh, okay,
Yeah.
that's real.
Yeah, fact check me, right? It's like that's why I put right in my bio the companies, their pages, and we built those pages too, right? It's like go look up the stock ticker. It's a real thing, right? It's like undeniable credibility because you're trying to compete in a world that is fake and no one trusts it. Mm-hmm. But if you're actually real, you can crush it.
And then how do you make sure that content is actually valuable? Because so basically we were doing multiple businesses. Like we'd have plumbing companies and all these small businesses. We had a consulting company. We're like, okay, we need to shut all this down to just focus on this one thing because we make all of our money from doing deals, and we're spending 80% of our time doing these little things. So that's all we're doing now. But we were doing a lot of quantity of like content, but not like quality. I feel like it worked, but it still wasn't like that great, I felt like. So I don't know the differentiator of like how to make it better.
My personal feeling on this topic is just accept that you're not going to compete with your content because you're not full-time content creators, and it's the most competitive sport in the world. Like, Hormozy is going to beat you every day of the week.
Yeah.
Like, it just is what it is.
Just be authentic.
Yeah, like the content's not really there, in my opinion, to bring in new people to the brand. It's to support the people you're bringing in that you meet in the real world, that you send DMs to and create authentic connections with. Like, I think it's better to just have the content keep following up on those people, have at least 2 stories up every day. Because you know how the stories work, right? It's like once somebody's looking at you, you're at the front of their bubbles.
Yeah.
You take one day off, they look at someone else's bubble, and now you're gone.
So you should be using stories on a regular basis for the getting in front of people portion
Just
of it.
communicating with the people who follow you.
So I really like not having to learn stuff myself and paying people to just do it for me. So what is your company? Like, how do we do this?
Yeah. I mean, we should, right? It's like, and we can get you in some of these campaigns. Like, you want to go on the Floyd campaign. He's going to put up a bunch of signed memorabilia. And he's going to say, hey, one of my followers is going to win all this. All you have to do to be entered to win is go follow my list of friends. And those are going to be our paid spots. And you're going to get 20, 30, 40,000 real people that are going to see that and come follow your page.
The problem with that, though, may be like it's not the avatar person, though, right?
He knows that.
And you're just...
Yeah. And that's the traditional thinking of why people lose on social media.
Okay.
I'm not trying to do any business with them, but I need my vanity metric.
Got you.
So that when I
Got
talk
you.
to the right person and pull them into the
Credibility.
brand, yeah,
Okay.
we don't want to sell them anything.
So where does then engagement, like in the world of bots and paying for followers and what, and then how does engagement, because I understand that get the vanity metrics up, that's very important to the people when they see you, so now you can communicate on a different level with someone who may not have communicated with you. But then how does we
could just go pay for $100,000 follower or 100K followers or something, you're saying?
Yeah, but engagement's, how big is engagement? Like, to me, that's the prideful part of it, is I want engagement. Like, I don't do a lot of social media, but I want to interact with the people that I know in the audience.
Dude, you
and I want
post
that
every
feedback.
day.
Yeah,
I see all
Way more than us.
more social media than anybody I know.
Dude, I learned how to use CapCut, and now it's just. And so I just walk around when I'm at the dog park and make videos of what my thoughts are. And so my thought process there is, it's for people to engage with me, but more importantly, people who see me now have a place to go and see what my beliefs are.
Yeah.
And I guess an extension of that question then is, how much of it is business versus how much of it is your beliefs? I do a lot of intermixing of business deals, beliefs, thoughts.
You should, yeah. 3 buckets, right? You got your hobbies, your lifestyle, your family, and your business, and you want to be equal on giving all 3.
Okay.
Right? Especially if it's kind of like Hormozy, right? He's the ultimate long game guy. 0 offers for a couple years, and then 1 he makes $100 million.
Insane,
right?
yeah.
I'm just not playing that game, right? So it's like, I'm going to put out lots of value content, and I'm not going to be shameful at all. Here's my offer. It's going to be in my story. It's going to be build your brand, or we're raising money for this deal. Like, I'm going to promote, right? Like, and then you look at the opposite of that, like Grant Cardone, just promote, right? Love him or hate him, like, guy's got billions. So it's like, none of this is right or wrong. It's just, what game can you play effectively and win? I think that's the better question.
And then how much does your personality play into that, right? Like, I imagine different personalities work differently in those different arenas or those styles.
Yeah. I mean, you're going to attract what you are, which I think's the whole point of being authentic. If you try at all to deviate from who you are, what you believe, the highest level frequency is authenticity. It's the greatest sales tool there is. You don't need sales tactics. You don't need word tracks. You just need authenticity. So it's the same thing with social media.
All right, we'll connect with you later on that because I think we want to do that.
Justin's the greatest salesman I've ever seen. He's walked in here. He hasn't even told us what his business
buying
is
his
or
product.
his offer
We're
is.
buying his product,
and we're
yeah.
trying to get him to sell us something. We're like, please take our money. We want in.
Oh, that's funny. Okay, so you're doing this back to the deals because I want to learn how you're raising. So you do this $3 million raise. What do you do next in terms of raise after that? Because you're mostly raising money, correct? For a lot of the deals, like that's your
That's the
specialty.
only thing I'm doing.
Yeah. So,
Yeah.
walk us through like what those other ones look like.
Yeah, so we had a trading fund at the same time we were raising for. So a lot of times it's, someone's coming into either the trading fund and then it's like, hey, we got an IPO opportunity. Those are SPVs, right? So it's like we don't always have one. So
What's an SPV?
a special purpose vehicle.
Okay.
So in real estate, they would call it a syndication. Like we got one property, we're raising for one thing, and then it's over, right? You might not always have a deal, but you want to be able to raise all the time. So that's why in the hedge fund world, it's like, okay, we've got these individual deals for late stage private equity, but we've also got a continuous fund that we're raising capital in that trades equities and currency pairings, like whatever, however you want to structure it. So I always had something to put somebody in. And then it's like, okay, you're already in this fund. We have this offering. They cross-pollinate. And fast forward to today in our private equity fund, it's a private equity hedged real estate fund. So 80% of the fund owns real estate, 20% owns businesses, and people can come in two ways, on the individual deals, or they can come into the debt fund side, which is continuously raising and we're continuously distributing. So it's like, hey, do you need cash flow? Do you want an equity multiple? I got something for every investor avatar.
And you're doing that model of the fund just in case you're not doing a single asset deal, you can still be placing that money to make sure you have a place to put it. Because
yeah, we'll pay our debt fund investors 1% a month, right? So they're getting 12% a year. It's a 5-year hold.
Yeah.
And then they get a 24% kicker with their principal at the end. So they're getting a 16% IRR in a debt structure. Mm-hmm. That's incredibly competitive.
What's the debt secured by? Your shares of your company?
So the businesses we buy with that, it's private equity, right? So we might go buy a pharmacy that's spitting off 40% free cash flow, paying the investors 12, right? Or an e-com business that's got a 50% margin. And then it's like we got enough cash flow to pay the debt, and then we can go develop some real estate or whatever you want to do with that capital.
So you're mixing then your equity fund and your debt fund for the acquisition, is that?
Yep.
And then you have different risk profiles in those different funds, and you're dispersing capital in the different ways based on those risk profiles?
Yeah, so we'll do individual deals like that are just straight equity, one raise, close. But the debt fund, it's a blind pool, right? Mm-hmm. The investors are putting their money in. They have no idea what we're going to buy, what we're going to do with it. You
just have regulation on what you can put it in.
Yeah, within the PPM fund documents, the deal disclosures,
Is one a harder pitch than the other?
No, I think it's really just what does that investor need and want for their personal life, and debt's not as risky as equity. It's also where are they comfortable? That's really it.
Mm-hmm. When did you start learning psychology?
Man.
At 13.
I read a lot, yeah. But that's actually I think one of my competitive advantages. I read so many books about how the brain works and psychology, mostly because I was just such an uncomfortable, socially awkward kid, and I just didn't want to feel like that anymore.
Interesting. Okay. Yeah. So you're a socially awkward kid. You weren't a charismatic sport athlete.
Very
Did you have a
quiet.
learning disability, or was it more your because you mentioned not being good at school.
Yeah.
Classic D class student, now business owner.
Yeah.
Obviously, you've worked on the psychology part. That's why I asked about it. What are a couple book recommendations?
Change Your Habits, Change Your Life.
Yep.
Tom Corley, I love that one. Oh, man. I don't know. Even the basics, like the psychology of selling, Brian Tracy, all the way back in the day. I love the old school stuff.
Mm-hmm. Tried and true.
Mm-hmm. And then, I don't know, really cool books. Matt Monero's You Need More Money. I really like that book around getting your mind right about, because people have money guilt,
Absolutely.
Who am I to make this money? And all those traps. And it's wait till somebody you love gets cancer and needs somebody to pay for it. You're going to wish you made some money,
Sounds like a self-worth book.
Yeah. Or just the importance of why are we really doing this?
Yeah.
All we all like the fun, shiny stuff. We like it, but that's not why we're doing it.
Yeah. Why are you doing this?
For that reason. Complete freedom. I think at this point, I want to be able to work on what I want to work on and not have urgency around any parts of it. And money provides that. The more burn rate you have on your balance sheet, the more your debt to income balance, every time you get the Lambo or the thing, you're actually constraining your ability to progress. So you got to have a balance with that stuff. And some people just get that, and I really admire that. I had to go through those experiences to realize it wasn't important.
Yeah, one of your pinned clips in your Instagram is it's not worth it to be a billionaire. And what I took away from that is someone that understands life balance is a fallacy, and you're trying to strike a harmony, and that harmony is based on all the things that you have in your life and being able to reconcile where are you spending that time, what are you trying to grow, where is that energy going, so that energy grows in that arena.
Yeah, I think there's this. We were talking about this last night. I think there's two types of people in business, like the billionaires, the Hormozis, like the people like that. Like they are actually wired to do this 24/7. There's nothing else they would rather do. Most of us are doing this out of discipline to get a result of freedom, or so we can give our family the life they want. We're not actually waking up every day with anxiety if we don't work on it. Like it's a different type of thing.
Wiring.
Yeah, I think we in personal development like to think we can force a lot more than we can. Like at the end of the day, you are who you are. You can change things to a certain degree. You can discipline your way to things, but a genius is a genius, and it's like, are you?
And do you even want to be?
Right.
It might be a curse.
Or do you want that responsibility?
Yeah. It is a big responsibility.
Yeah.
I can feel Trevor getting tired. He's like, let's get back into deals.
Well, Trevor's the one who's wired like that, if any of us are.
He is.
Yeah, you got the anxiety in the morning if you're not figuring out how to be a billionaire that day. I don't think any of the rest of us have that. The rest of us
It's a fun goal to shoot for, but it doesn't keep me up at night.
No, it's a means to an end.
Yeah.
But do you still feel any imposter syndrome?
Yeah, but less than I used to, because I've had a couple experiences where I just realized that outcomes are just so out of your control, and we like to think that we have control of outcomes. It's just kind of like the sale of Heartland Foods happened because of a pandemic, right? We were in a pretty bad vehicle with bad margins. Like it was not that we were bad at business. It was not any of these things. We needed market conditions to make us successful, and it happened, right? So it's like, I don't know. Hard work's not always the answer. I think that's why I reverse engineered what I did next, and I'm like, all right, well, it needs to be recurring revenue model. Like I want to be a lazy workaholic, do this work once and get paid forever. And it's got to have huge margins. Like, and you start to look at, and do people wake up and Google it? Are they in the market for it? Because if you have to create the market, it's going to be very difficult.
Yeah.
Yeah, and that's what we were in until the Blue Aprons of the world and Instacart. Like nobody woke up and wanted food delivery, and we were trying to sell something the market didn't even ask for.
Do you know Christopher Lockhead?
No.
He's a tech guy that has a really nice podcast, but he talks about category king, creating new categories and not trying to compete. And so you are creating a new category. It seemed very contrast to that thought process.
Yeah, and that's probably his superpower.
Yeah.
Figuring out, but that's a very, very difficult thing to do compared to just being the next best person at selling a sponge.
That makes sense.
Like it's like water companies, right?
Yeah.
Every couple of years there's a new water. It's like that goes to $1 billion and then sell to Coca-Cola. It's like
I was listening to the All In podcast. They were interviewing the old CEO to Palantir, and he was like, "You have to be 10x better than the best person in that room." I do not agree with that statement. It feels like you don't either.
No. I think the standard of what excellent is so low that you just need to be a little bit better.
Yeah.
You just need to answer your emails within 24 hours, pick up the phone, and then you're already better than 99% of everyone.
Be 0.01% better.
Yeah.
I want to go back to the raising too, because I really want to dive into it, just because we're trying to build this out so heavily right now, and we're such in the beginner stages of it. For reference, how much are you raising or targeting to raise annually now for these funds?
We want to raise $100 million this year.
Okay.
And there's different ways of doing this, right? We raised $10 million for Safe Space in 3 weeks, all from friends, family, and then referrals.
And what's the average contribution from an individual at that point?
Most people are putting in anywhere from $100K to $500K.
Okay, so you're doing pretty small chunks then at that point to get
It's
there.
a grind, yeah. Retail is a grind, right? And then now we're looking at an option to buy 60% more of the Bend in Chattanooga, which we just bought 20%, and that's going to be $25 million. And now I'm like, all right, I don't want to raise $25 million from retail, so I've been reaching out to family offices, institutions, and I've had some meetings where guys are like, well, I represent this royal family in wherever country, and they don't really write checks lower than $100 million, but for a first relationship, we do 50. So it's like we'll do the 25 to buy the equity, but then we want a piece of the development after that. And then if things go well, they deploy in billion-dollar chunks. It's like that type of capital is actually easier to get than to grind out retail raises.
Okay. Dane, could you describe kind of what we're doing now and where we're trying to go with it? Because I'd love to get your feedback because you've already been through the path.
Yeah, I mean, right now we're doing everything retail. Like we have two groups that would be considered like very small family offices that we know that'll write pretty big checks.
And give them reference, so like we're raising $2 to $6 million per deal right now.
Yeah,
then,
I mean, we need to raise $5 million before the end of the year, and that's kind of the realm that we're in. And the hope is that on 3 of those deals, 2 of them will be funded by either of the family offices, and so like that's the direction that we want to go. The hardest thing is that we're always in an acquisition mode, or we've been in an acquisition mode for the last the whole time, we've been doing it really. And so you're trying to build a relationship with the family office. The family office takes so much longer because the retail investor, you can get the credibility from social media and from the podcast and from them seeing you speak at an event. And then people will walk up to us and they're like, I want to give you money. Right. And it's a $50,000, $100,000, $150,000 check. And that is awesome. Like we love working with those people. But from the lens of how do we scale this thing where we're looking at, $30 million developments or $40 million developments, we can't raise in $100,000 checks. Like we don't have the bandwidth unless we're doing one project and we have 6 months, a year to close it. And so you get in this, you get trapped where you always have a 3-month timeline to close. And so it's not I don't want to say it's not worth it, but it's really hard to get in the mindset of like, okay, while I'm building the family office relationship, I have to be raising retail, because all you really want to be doing is raising retail, because you got to close the deal in 90 days. Yep. And family office isn't going to write the check in 90 days if you met them on day 15. Yep. And so I feel stuck in like a feedback loop of just, I know that it needs to be family office and that's the direction we're going, but I'm not and we just started building the relationships. I will say that we got a list of a bunch of family offices from Fintrix, which is just a company that sells a list of family offices and RIAs. And I've reached out to a number of those just to not sell them on anything. Like I just need to know what gets them excited, and so that I can start doing that. But we're in the early stages of you have no idea who we are. Can I grab coffee with you? I want to talk about what you guys do. I want to talk about what we do. I think that we have something valuable for you. Yep. Here's kind of some background on us. Maybe we do a deal in a year kind of thing, or 2 years. It's so far out that it's like the Hormozy thing that you're talking about, where I know that I need that in the future at some point, but it's so ambiguous. And you're right. They're not going to write checks on the deals we're doing right now, but I know that the direction we're going, I need them to write checks in the future. And so building those relationships has just been sort of a struggle to say hey, I know we're doing $5 to $20 million deals right now, and they're like, we only write $25 million checks. Yeah. And it's well, we're gonna do those deals though. I promise. I promise. We're headed that way. But it's cart before the horse, right? You can't do the deal until you have that check lined up. But it's hard to line up the check, in my mind at least. And that's the insight that I would want is how are you? Because you obviously came in where you already had an offering that was massive. And so I don't know. I'd love to hear your thoughts on what you would do if you were trying to say, hey, we're good at what we do at the scale that we do it at. We know we can do it at the larger scale, but we need to prepare these partnerships. I'd love for you to you at our projects, I don't know, and just start believing in us now with the hopes that it'll be a strategic relationship later.
Yeah, you're doing the exact right thing, because you got to have a 10-year view with the big boys. And I think what you should do is ask them questions like, what's your buy box, right? How much do you deploy? And then make a spreadsheet of all of who does what, maintain those relationships so that when the right one fits, right? It's the family office I just brought up that might do the 25 million plus a 50 plus 100 after that. They specifically want to invest in big infrastructure projects in the U.S. We're developing a quarter of a city. Yeah. It's that has $100 million of TIF financing from the state of Tennessee. That's their buy box perfectly. So it might work, right? Mm-hmm. And I've probably met with, I don't know, hundreds of people that represent family offices and institutions. and that's what it's going to take, right?
How are you starting those relationships?
All like LinkedIn outreach.
Yeah.
That's where you want to go for the big guys.
Yeah, I've been building out my LinkedIn over the past couple months just to get credibility there, at least just get a response. But like, what would you say is the biggest thing to build credibility on LinkedIn, first of all, and then second, like to actually set a meeting with somebody like that?
You just got to ask. I don't even think your LinkedIn credibility like matters that much. I think at that level, a lot of people want to be pretty silent. Like a lot of them don't even have profile pictures on LinkedIn.
Yeah.
But a lot of this, like you go into these rooms like the family office club, right? And you meet people in there who do have family offices that, you know, are your size that have scaled. They were like, yeah, we got this one great relationship and they've been funding all of our deals for the last decade. Right?
Yeah.
So I think it's like any other sales game is you just don't know what's going to happen. You just keep going and eventually you're going to find that partnership.
So it's really just about the reps and how many times you try.
I think that's everything in life.
Yeah.
I think we just overcomplicate everything. Like you just can't kill someone who doesn't quit, and people who go the hardest eventually figure it out.
All right, Dan, you got to go hit the phones.
All right, I'm in.
Here you go.
So tell us a little bit about your businesses. I'm would love to know more about you. Like you say, you guys go out and you'll pick up would you say e-com or you'll pick up some other sort of business. Like, how does that work? I mean, you're buying a business that's already staffed and you guys are involved like as a board in running that business, or what does that look like?
Yeah, so to put some context on this, my partner over at Pitch Equity is Scott Boroff. He's been doing this for like 35 years, right? So he was an investment banker on Wall Street, funded over $1 billion there, then went on the private side. He's got over 20 exits. He's taken a couple companies public on the New York Stock Exchange. Like the guy is a beast, right? So it's all his relationships. He's got bankers that are like, hey, we got this business in foreclosure or this piece of real estate, right? I mean, he's able to get deals that are just stupid. Like, I mean, we're talking maybe 5x equity on day one. And that's the case with the Chattanooga project. But I was riding around with him. I was out in Tennessee 2 weeks ago. He's like, yeah, we're going to go look at a couple deals. So we left Nashville. We stopped at a truck stop. He's like, oh, yeah, like, see the pilot right there? He's like, this land is prime for development. These guys can't finish the project. I think we can wholesale the land and build a truck stop here and make a ton of money. And I'm like, okay, we might do that with the fund, right? And then that was on the way down to the Macklemore Resort in northern Georgia, which is a beautiful new Curio Hilton property that they're developing golf courses there. And they need capital for that. And then he's negotiating, we might buy a golf course, you know? So it's similar to like how we're seeing deals too, but that's just a way bigger scale. How many more players do you need in a deal of that size? Because you're just doing way bigger numbers. It really depends. It's just not as complicated as you think. It's just bigger numbers.
Who's operating those though?
So,
like when you acquire a golf course, whose job is it to make sure that the golf course is making money?
Yeah. You gotta have a management team already in place, or with like Scott with the e-com stuff is he has a friend that has a company, and what they literally do is take over e-com businesses and scale them.
Oh.
Right? So he'll find one that's already got proof of concept, the product's doing well, the margins are there, and all they need is someone who knows how to, because going from 0 to $1 million is very different than 1 to 5 and 5 to 10, like these different break points. So he just acquires it at usually one-time sales is what we can buy these businesses, and then just put fuel on the whole thing with ads and blow it up, and he's great at.
Are you always buying the entire business, or are you going in and buying a portion? Like Lab Golf, for example, they just sold to private equity, but they sold a portion so they could get global brand awareness and better production facilities, and so it was more of a strategic. Or are you going in and take the whole thing?
Combination.
Okay.
Yeah, like the Bend in Chattanooga, we originally bought 20% of that project, and now we've got an option. We're trying to get another 60% on it. Because then, depending on the documents, all that stuff, like who has control, that's probably more than a decade to develop that entire, from the marina all the way to the downtown.
Yeah, what is it? Explain that part. It sounds amazing.
Yeah, it's huge. So, I mean, it's 120 acres right on the water in Chattanooga. It's called the Bend. And there's going to be a whole downtown, restaurants, amphitheater, the marina. Just got the approvals and permits for the marina. So everything's done. The state of Tennessee is financing, I think it's $120 million in taxpayer financing that gets rolled back. So we're talking hotels, multifamily. The university there, I think, is TCU. They're out of student housing, so we'll be able to put some of that in, which makes it part of the opportunity zone, so you're not paying any taxes. If you hold for 10 years, I think that's how it works. So these are like all these selling points you come in, and so you'll have the option, right? Right now we're doing horizontal land development, and you can either sell off parcels to someone who's going to build a hotel. We can raise more capital and be part of that, ground up. And you make those different decisions along the way. And as it gets more and more developed, the land increases in value, And there's a lot of ways to make money in a big project like that.
So why did you buy 20%? Why do you want to up it to 60?
So it's really just, the original players. It's under NDAs, but there's only a couple billionaire families in Chattanooga. You can probably figure it out. But, they control most of the project. The family trust is getting older. They don't want to develop it anymore. So, but they also don't want to just sell it to anybody, right? So it gets kind of political there. And then you bring in other investment groups. There's some celebrities that are involved. And I think with this one, the reason why we want to get that 20% is so that we can have total control of the project.
Gotcha.
Yeah.
Is that first chunk of you sort of proving your ability to build out the horizontal and the strategic partnerships to go vertical, and then you get the ability to buy more? Or
so this is why I could never do something like this, but Scott can, right? He's from Knoxville. He used to own the largest single-family home in the city. Like, he's so well-known and connected. The other developers of this project are his friends, and that's the only way I think you really get a deal like this, where the land appraised for $131 million by CBRE, and we bought it for 26.
Oh, there's your 5X in one day.
So for an LP, like when I was raising the capital for this, I'm like, hey, give me $100,000. Your equity's worth $577,000 on day one.
Yeah.
Well, and then
I want to give you more.
Yeah. So then you're able to leverage that position too, because you create that equity spread by buying at a discount, and you're taking that to the bank, or?
Yeah, I mean, we don't need any debt.
Yeah.
Because
you're raising.
No, the state
gives you the
financing the whole project.
Million.
Oh, okay.
Yeah.
Yeah, it's like the third largest TIF financing behind like the Titan Stadium.
Wow.
Can't remember what the other two.
So is your guys' play like mostly taking fees on that? Are you owning them, like as much of it as possible, or what's the play for you guys specifically?
Yeah, we take an acquisition fee on the raise, but most of it's the equity play.
Yeah.
That one deal will, you'll refinance or sell pieces of it so many different times on the way up, and it's kind of like, all the way to like whoever buys that last A-class product that's fully occupied. I mean, we are at the very beginning stage of how that rolls downstream.
Yeah. What risks do you take on when doing a deal like this then?
Man, I think like with any deals, there's definitely risk. I mean, economic risk probably. I would
Not
say.
being able to occupy it all, or you're overbuilding, or.
Yeah. I mean, it's just so hard to say. Half the time in these deals, like what I think is the risk going in is completely different when you're in, and then things that I think aren't risky end up being the riskiest. It's just like all you can do is make sure you buy right, and make sure that every piece of the project is just the right operators, the right contract, like all those different things, right? And then the outcomes will be what they will be. Like you can't
control everything, just like you said.
You can't control Jerome Powell. You can't control all these other factors that have a lot to do with what the outcome will be on a real estate deal.
Yeah. How big is your company? You said it's Pitch Equity is the name of your company?
Yeah, it's brand new. We launched it about 6 months ago.
Okay. How many people are involved in that specifically?
Let's see. Directly under the company, 1, 2, 5 of us.
Okay. And then you guys are just fully raising for that, or is your partner actually like putting these? What are the roles, I guess, within there?
Yeah, so I'm the fund manager and capital raiser.
Mm-hmm.
Scott Boroff and Coach Michael Burt are 50-50 partners on the fund. And then we've got a CFO, an integrator that kind of helps with all the GHL stuff, CRMs, and integrating everything. And then I run the fund, right? So from the time someone comes in, PPM, deal disclosure, identity verifications, like everything you got to do, fund management, that's what I handle.
So Scott is the one finding the deals and where you should actually park the capital, and then you're just raising it all.
Yep. Yeah. Deal flow is 100% Scott.
Okay.
He's the visionary in that aspect of it.
Yeah.
Mm-hmm.
You think you called him a beast? He sounds like a beast.
He's an absolute animal. I mean, this guy took Miller Energy public in 2012, went to like $9.50 on the New York. You can see the CNBC clips. I mean, so he made like $100 million in a day.
How did you meet him?
Social media, networking. So Coach Michael Burt, who's his partner, he's also on the board of Safe Space, the public company we were talking about, that I'm also involved with. And he was doing a deal with my dad. on something called the Confidence Factory. It's like teaching kids all the things they don't learn in school. So they're working on that concept, and he's like, "Hey, I'm launching this fund over here. We need somebody to raise capital around the fund." He's like, "Oh, go meet my son." And then him and Scott flew out to Vegas to see me, and we inked that deal in January. So it's still pretty new.
So how much capital have you raised then, starting in 2022 to now?
Total, we've raised about $14 million.
Okay.
Tell us
retail.
what's it like to be part of a public company? What role do you play in that?
It's exciting, but it's also overwhelming. You've got a whole different type of compliance. For the whole quarter, insider information you have to keep your mouth shut on. And when you're running investor relations, all your investors want to know
what's going to happen.
Yeah, they directly ask for insider information, like constantly. Like sometimes the same people multiple times. And I'm like, hey, like, do you want to be in an orange jumpsuit? I don't.
Can't tell you that.
They're asking different questions to get to the same point, really trying to get you that.
Yeah, they're like, what's going on with the stock? And I'm like, someone's buying, someone's selling. Like that's going to be my answer every time. But it's really cool because. Especially on the investor relations side, you have something called a volume weighted average price. That's the 30-day average of the stock price. So if you're going to raise private capital, that's set for 30 days, no matter where the public price is. So when we went to raise $10 million, and the reason why we did it, we actually only need to raise $6 million. There's no debt on the company, don't really need the money. Scott's funded the whole thing since 2016 from startup. But when you want to uplist onto the New York Stock Exchange, you have all these boxes you have to check. You have to have a certain amount of shareholder equity, a certain amount of public shareholders. You need a $2 stock price. You got to be fully audited reporting. So we're checking all these boxes, and one of them was you got to have a couple years of burn rate sitting on your balance sheet. So that's why we raised the capital, just to park it there and check that box. And we're 3 weeks into the raise, and we only needed $6 million, and money's flying in. We hit 10, and we're like, all right, we got to cut this off because we don't want to dilute the shares. The shares too much.
Over raise.
Right, and part of the reason why that happened is there was a lot of hype around the raise. The volume weighted average price was 10 cents, but the stock went to 40 cents. So I'm getting on calls with people saying, hey, you can get in at 10 to 40. Like, do you want a 400% return to put your money in, like on day one? It's just not a difficult raise. So that was really exciting. And then we're not raising any money privately for it now. It's just managing investor relations, media tours, getting ready for the uplist process, and then that's when all the institutions, like you do your whatever you want to call it, Wall Street walk through, and take this thing to a unicorn.
So is Pitch connected to your public company?
They're not affiliated at all, except that Scott's the founder of both.
I see.
Yep.
So you're not raising money for one and then potentially rolling it over. Okay.
Nope.
But you were telling us before the show, like when a public company needs cash, they can't go to the market. Like they're actually selling private shares away from the stock exchange to raise capital. Yeah,
I think there's a lot of ways to do it. There's a lot of, you can take debt.
Yeah.
You could borrow like portfolio.
Sure.
Stuff like that. Or you could, do more rounds. And, sometimes it's good, sometimes bad, depending on the dilution. And it gets really complicated on the public side.
Interesting.
I run everything through our CFO. It's like, can we post this on social media? Can we, we got to be really careful.
So why are you doing a multitude of businesses versus just one, personally?
So for me, I feel like I could do a couple more because I'm just doing one role, right? I'm not in the business on a day-to-day. Like I kind of am, but not in a capacity like it was at Heartland Foods, where you're a small business and it's like I'm selling all day, I'm training people all day. I'm like Saturday, Sundays. Like I would work 3-4 months straight without a day off in those days, and now it's like I can be anywhere. It's all Zoom. It's all just higher level stuff. A lot of management.
You got your one thing, and you have a lot of leverage to do all the other thousands of millions of things that get done in what you're accomplishing.
So
it's like I'm running the social media for Safe Space through our marketing business at Currents Marketing, but it's like I have a team, and I'm just making sure they're doing all what they need to do.
Do you feel like it's hard to raise ever because you're not as involved directly with the deal? Like you may see it and understand it, but because right now Dane gets to touch like every portion of the deal, but I'm imagining as you grow and you get farther removed from the deal itself, you're having belief that it will work, but you don't know it like with all the intricate details necessarily, I'm guessing.
It's a funny thing with sales, right? Sometimes the less you know, the better, right? It's like, team's got it handled here. Like, let's make it really simple, right?
Yeah.
You know, sometimes you get too in the weeds and it gets too complicated on people. I think you got to remember that people are giving you their capital because they know it's better in your hands than theirs. And I think that's the hardest sale you ever make in sales, is to get someone to part ways with their money and admit that it's better that you have it.
Because that's a self-worth statement you're pulling out of them.
Yep, and people get so emotional. I'm sure you've had these, you know, activist LPs that they give you. It's usually the ones that give you the least that are
The most tied to it.
Oh yeah.
Have you ever ran into a problem like losing people's money or anything on any of these?
Oh yeah.
How'd that go?
Wait,
What happened?
wait. Next episode.
Next episode.
Okay.
No, we got.
I'm happy to talk about it.
No. We'll talk about it next
part two.
episode.
Okay.
Because that's least favorite
We
deal.
do need to
is
lead
my
with the
guess.
AI in the next episode, though. We don't want that buried in an episode.
Lead with it.
Yeah.
Yeah. Okay. Good deal. All right.
All right, guys, we're going to wrap this one up.
Yeah. Let's do it.
Justin Freishtat. Did I say that right? All right.
sir.
Our first hedge fund manager sitting in the new SMI podcast studio. Episode 1 of the new studio. Thanks so much for joining us today, Justin. It's been awesome to listen to you. I feel really dumb right now and really outclassed.
This is the quietest game it's ever been.
My brain is spinning. Yeah, so it's been really cool to sit here and talk with you. And we're going to come back to another episode, talk about some deals. And Deal Junkies, we love you. What?
If people want to reach out to you or get a hold of what you're doing, how should
they want to write you a check to Justin. How do they contact you, Justin?
Yeah, social media is the easiest way to find me. No one's got a last name like mine, so it's Justin. Last name's Freishtat. And stock ticker, Safe Space Global, it's SSGC.
SSGC. You heard it here, Deal Junkies. Thanks for listening. Please share us, and we'll see you next time.